Being profitable as a trader is simple, but it's not easy. I believe if you can learn how to adopt a winning mentality as a trader, you will have better results when it comes to trading the foreign exchange markets, stock markets, commodity markets, whatever market of your choice. In this video, I will be sharing with you my secrets when it comes to adopting a winning mentality. What's going on, YouTube? It's your boy Reef Trades, aka Kaika, and in this video, I will be going over a mini trading psychology crash course that I put together for you guys that I believe is going to help you in your trading journey. If you guys can learn to adopt the principles in this video, I believe you are going to see a significant change when it comes to your approach to the markets. Let's get straight into it because I do not want to waste your time. So today we are going to be covering understanding the market's nature, risk management and capital preservation, process over outcome, emotional control, longevity, mindset, and discipline and patience. We will be covering all of these topics when it comes to this mini trading psychology course. First things first, I want to start off with a little introduction. I want to talk about trading with integrity and trusting God in the process. For all of those who don't know who I am, one, I am a man of God, and I truly believe that biblical principles, for me, are the key to not only living a life that is morally correct, but also approaching the markets correctly. I believe the Bible has principles that if you can uncover the principles within the Bible, you can apply them to the mindset you have approaching the markets. One of the key warnings the Bible gives us is to guard our hearts against greed. In Luke chapter 12, verse number 15, Jesus says, watch out, be on your guard against all kinds of greed. Life does not consist in abundance of possessions. See, this is a powerful reminder that wealth should never be our ultimate goal. Greed leads to hasty decisions, poor judgment, and often disastrous outcomes. What you've learned in your trading experience is you found yourself more greedy. What you learn about the markets is actually a mirror, and it tells you a lot about yourself. See, you can't run away from yourself. The markets is not a get-rich-quick scheme. See, we try to get away from our 9-to-5 jobs or poverty lifestyle, middle-class lifestyle, because we see the opportunity that trading actually provides when it comes to financial freedom. But if done incorrectly, you can actually set up yourself in a disastrous way, making decisions that is not going to build your legacy, but actually stunt your legacy and actually discourage you in the process of trading. In trading, the desire for quick riches can cloud our judgment and cause us to chase profits without proper consideration of risk management, or of risk, sorry. Instead, we are called to exercise self-control, recognizing that wealth gained by dishonesty or hastily, meaning getting money fast, can quickly disappear, which Proverbs chapter 13, verse number 11 tells us. So one thing we must understand is a winning trader understands that success takes time, effort, and wisdom. Listen, you cannot approach the markets without wisdom. Wisdom is strategy. All right, we're not over spiritualizing this process, but I want you to understand that we are spiritual beings living in a physical world. And when it comes to money, money is something that can make your emotions go up and down. Listen, money, we need money. Why? To pay our bills, to put food on the table, to provide for our family. We need it. And when you don't have it, guess what? You do a lot of dumb things. So to avoid doing dumb things, what you have to do is adopt the mentality that is going to allow you to build wealth. Okay? Wealth that is generational, wealth that is going to be able to sustain your legacy, so on and so forth. Trading is not a get-rich-quick scheme, and the Bible cautions us for falling in the temptation of seeking instant gratification. Proverbs chapter 28 verse number 20 says a faithful person will be richly blessed, but one eager to get rich will not go unpunished. I want you guys to understand that, like I said before, trading is not a get rich quick scheme. Listen, getting rich quick is a temptation that we all feel within our fleshly nature. It's a lust that we feel. Why do you think people want to go out there and do drugs, do OnlyFans, do these things that is going to lead to you getting instantly gratified but ruining your legacy? See, we have to think smarter. We have to adopt a mentality that's going to serve us in the long run, because if not, guess what? You're not going to like the outcome of your life. Faithfulness in trading means sticking to the process, not cutting corners, and avoiding reckless decisions. Listen, this is going to be a process. If you're choosing to trade, submit to the process. Accept that it will not happen overnight. Get your strategy down. Figure out how you're going to approach the market. All these things matter when it comes to you becoming a better trader. The allure of easy money can lead people to making poor decisions and great losses, but those who are patient, disciplined, and diligent will see the fruit of their labor in due time. God honors those who work hard and approach the endeavors with honesty and integrity. The reason why we want to build our trading foundation on God is because if you don't, you run the risk of making error outside of God, and that won't allow God to honor you in the process of this endeavor and this journey of trading that you are on. So as a person that stands on biblical foundation, the Bible and God has really served me well in adopting a mindset that allows me to become better as a trader every single day. See, this process for me has been a process of 5 to 6 years on and off, but one thing I can tell you is I have never quit on the vision and the dream that God has showed me about trading and how it's going to actually help me with my legacy, how it's going to allow me to become a greater individual just when it comes to the way I think and my decision makings. So family, I'm telling you, if you want to become a good trader, stand on biblical principles. If you can learn to seek first the kingdom of God and his righteousness, the Bible tells us in Matthew chapter 6, verse number 33, listen, we will have everything added to us when we can seek first the kingdom. We are not going to the markets. I'll put it this way. My approach when it comes to the market is not to get rich quick. When it comes to the market, my goal is to utilize the funds and the capital that I make from the market to build my legacy that's going to further the kingdom of God here on this earth. Our goal is to utilize the funds that we get from the markets to build the vision that God has put in our heart to further his kingdom impact here on this earth. At the end of the day, we can't further the kingdom of God simply by working a 9-to-5 job. If you want to execute everything that God has called you to execute and what he put inside of you, you have to find a skill set, you have to find a passion and a desire that you can turn into an income stream so you can be financially free to do whatever God has put in your heart without having to worry about anything else. Colossians chapter 3 verse number 23 encourages us to work wholeheartedly. Whatever you do, work at it with all your heart, as working for the Lord, not for human masters. You see, as traders, we are called to put in the necessary effort to grow our skills, improve our strategies, and learn from our mistakes. Trading is a craft that requires constant refinement. This means being diligent in our learning, applying sound principles, and being faithful even when success seems slow. It's about trusting God in the process, knowing that he blesses the work of our hands and provides for our needs in his perfect timing. See, if we can learn to do everything unto the Lord, approach the market with, Father, I'm doing this for you, lead me and guide me, and not be selfish with what you want, not be selfish and get caught up in the lifestyle that trading can come. Because listen, God does not have a problem with you desiring a lifestyle, but he has a problem with you idolizing money. He has a problem with you idolizing riches, abundance. He has a problem with us idolizing things above him. He has no problem with us. He has no problem giving us favor and abundance, but we have to be proper stewards of what God has given us. See, there's a lot of people that come to trading with the wrong mentality. You come to trading trying to get out of your 9 to 5 job, to live the lifestyle that you want to live, to stop whatever you're doing now, to chase after what you've seen on Instagram. Now, I'm telling you, that is a wrong mentality to have, because it's only going to lead to a down spiraling effect of bad management, bad decisions, and get rich quick schemes that only last for a moment. Our goal is longevity, family. Our role is to remain faithful as traders, disciplined, diligent in the work we do. But it is God who ultimately provides the increase. When we rely on his guidance and wisdom, we can trade with confidence, knowing that we are operating within his will and purpose for our lives. That was a little introduction. What I want you guys to understand is everything that I do on this channel is influenced by God. Every video is made not meant to, I would say, not meant for personal gain, but to truly give back. I believe God has given me a wealth of knowledge to provide to all you new traders, all you experienced traders, those who are interested in learning a new mentality. I believe God has given me insight and wisdom to help you in your process. And if you guys find if you guys find value from this course, man, make sure you leave a like, comment, and share this video with one trader. Let's get into the mini course. The first thing we need to understand when it comes to trading mentality, or adopting a winning trader's mentality, is understanding the market's nature. Now, the market works in cycles, okay? There's seasons of opportunity and there's seasons of scarcity. What we have to learn is markets move in cycles: bull markets, bear markets, and periods of consolidation. Each phase has its own opportunities and risks. You must learn how to identify which phase of the market you are in, which cycle of the market you are in. If you are not able to identify where you are at in the market, you will actually find yourself losing more money, your trades going against you, because you don't have the awareness of what's actually going on in the markets. I see a lot of newbie traders get into the markets not really understanding market maker cycles, not understanding how order flow works, how liquidity works, and we'll get into that in another video. But they end up actually losing a lot of trades because they don't know how to go with the flow of the market. They try to predict the market. Understand that the market is already in the flow. Your job as a trader is to observe, get in the flow, and execute at a high level. Not predicting, but going with the flow of the market. Just like seasons in nature, there are times to plant, grow, and harvest, and a time to wait. What you need to understand, that there's going to be a time for you to actually execute, get in the market, and take a high quality trade, but there's going to be a time where you need to sit on your hands. There's going to be a time where you need to not even look at the charts that day. So understand which season that you are in when it comes to the market. What phase is the market in, so you can become a trader that executes at a high level and not an emotional level. Because when you're looking, the FOMO, the fear of missing out, when you see these big volatile moves in the market, it's going to make you think that you're missing out. But the reality is these moves happen every single day. In bear and bull markets, they happen every single day, and you can catch them on a smaller time frame, 1 minute, 2 minutes, 3 minutes, and you can see that the market is so fractal that big bullish and bearish engulfing moves happen every single day. So do not be scared of missing out on a trade, because the market presents opportunity. every moment. Okay. The next thing we must understand is recognizing market sentiment. We have to learn to analyze the market sentiment, fear, greed, and neutrality. Okay, to gauge whether the conditions are favorable for trading. Understand that emotional extremes in the market often cause the market to have these turning points in the market. For example, extreme greed might indicate a potential top. So what we have to understand is this, okay? Emotions drive part of the market, okay? Meaning when you get into a trade, what do you think? Oh my gosh, it's going up, it's going up. So you get in. And see, all this volume is being created by retail traders. And when the market makers or the banks see these trades, they're going to end up taking those trades against you because you're not going with the flow of the market. So understand that fear, greed, and neutrality, if you can understand where the average trader will operate in fear, greed, or being neutral, if you can understand where to see that in the market, you can find high probability setups that actually come into your favor. So understand that emotional extremes is part of what builds liquidity within the market. There's a lot of traders that have that FOMO, that are scared to miss out on trades, but they end up blowing their accounts because they just don't know how to control their emotions. Defensive and versus offensive trading. Now, you have to learn when to play defense, which a defensive position in the market is protecting your capital. Okay, you have to learn when to play defense. Part of playing defense is sitting on the bench and not even getting in the game. Like really just being an observer in the moment. You can think something's going your way. One little move can actually go against you and you can lose your entire account. You can breach that eval, right? So you have to really learn how to protect your capital. The goal is capital preservation. You want to get in the market, but make your money, but not give it back. Also, you have to learn when to play offense. You got to learn when to capitalize on the opportunities. You got to learn when, like what some people call it, drop your nuts on some trades because it can change your life. So we have to truly adopt the mentality of when I approach the market and I see this setup, am I going to be defensive, protect my capital on this play, or am I going to capitalize on this opportunity that I see? So what you need to learn is practice in volatile markets, reduce your position size to limit your risk, and in trending markets increase your exposure strategically. See, your goal is when the market is really volatile and there's not really a direction, it's kind of going up and it's kind of going down, kind of going up, kind of going down, right? And there's not a clear trend taking place, easy trend. Man, reduce your size so you're not blowing all your capital, okay? Just in case it goes against you. But see, in trending markets, in bearish and bullish markets, clear bearish and bullish markets, listen, capitalize on those opportunities. Learn to find continuations within the market that is actually going to benefit you. Adapting to market environments. See, flexibility is crucial. Markets change every single day, and a trader must adjust their strategies and expectations accordingly. You have to learn. If you have a certain setup, okay? If you have a setup, A setup, B setup, C setup, etc., what you have to learn is, okay, if the market is accumulating, I have my setup. Instead of using a 30 pip stop loss like I usually do, because it's accumulating and it can go any way, I'm going to use a 10 pip stop loss. As a trader, you have to learn how to adjust on what you see happening in the present moment of the market. Regularly review your strategy to ensure it's suitable for current market conditions. The market conditions could change every single day. So you have to learn how to approach the market with a mindset that's actually going to benefit you in the long run. And making those adjustments and adapting to those market conditions could possibly grow your account 1,000% in the long run rather than you blowing your entire account. Patience in different market conditions. See, not every day is a trading day, and this is one thing you have to understand. There's certain days that you're going to sit on your hands. So you have to learn to cultivate the patience to wait for high probability setups, even if that means sitting on your hands. In periods of consolidations, many traders lose money by over trading instead of waiting for clear trends to emerge. Your goal in the market is to make money, okay? Not lose money. That's it. Your goal is to make money, not lose money. And if the market is accumulating or going through a consolidation period, you're better off just waiting because there's no clear sense of direction of where it's going anyway. See, we mess up when we want to take a trade every single day. We want to take a trade every single day. Now, could you trade consolidating markets? If you have a plan that is for consolidating markets, yes, but don't expect the home runs. And I see a lot of people do this. They see the market is clearly consolidating. They try to go for a home run in the markets, right? 1 to 10 RR, but the market's consolidating. So that's not likely. That's not likely to happen. So you have to learn to have patience within the market and stop trying to get in every single trade, because not every day is a trading day. In the beginning of my journey, I used to trade every single day, but now I learned not to trade Monday, some Tuesday, some Friday, some news days, right? You have to learn to preserve your capital as much as possible because your goal is growth. Your goal is growth, not losing your capital. The next part of this mini course here is we're going to go over risk management and capital preservation now. Okay, risk management and capital preservation is one of the biggest things that you must understand as a trader. You have to learn how to limit your risk, because at the end of the day, the market is 50-50. It's either going to go in your favor or not in your favor. That's the reality. So learning how to preserve your capital is something that can help you in the long run when it comes to building your portfolio. The 1% rule. The 1% rule is something that I want you to get down as a trader, especially for those who are doing prop firm tradings, right? Where you only can sometimes, a prop firm will offer you 3% drawdown, 5% max drawdown, 5% drawdown, 10% max drawdown, whatever it is. One thing I've learned is if I have a daily drawdown of 3%, I want to have the mentality of risking either that 1% or a 0.5% per trade, so I can have more trades. Or if I am risking 1 to 2% on a trade, guess what? It's a high probability trade, and I'm willing to go with it on that day. So what I've learned is risk no more than 1 to 2% of your capital on a single trade, because this protects your account from significant losses. So for example, if your account is if you have a $10,000 account, risk only $100 to $200 per trade, ensuring that you can survive a series of losses. The problem is when we try to shoot for the stars on a low probability, fear of missing out type of entry. That's the problem that a lot of traders deal with, is we get into trades that is not even profitable, but because we just funded our account, we just loaded up our account, right? We just got an eval. We want to go ahead and drop our nuts on the first trade, which does not make sense. It is not a wise decision to do that. So as traders, we have to learn to adopt winning habits that's going to allow us to benefit in the long run. Position sizing. The next thing we have to understand is learning how to adapt to risk. We have to learn to adjust our trade size according to your risk tolerance and the market volatility. Higher volatility may require smaller positions. Understand where you are at in the market right now. What is the market doing? Is it bearish and trending, bullish and trending, or is it just accumulating and consolidating? What is it? What is it? Right? If you don't know how to adapt to risk, if you don't know how to adapt to your risk, right, or adapt to market conditions, then you're going to end up losing a significant amount of capital than you expect. So if you need help limiting your risk or really adapting, figuring out the calculations of the pairs that you trade, of how much I should risk and what should my size be, how much lots should I use, excuse me, use a position sizing calculator to ensure you are risking the right amount per trade. Stop loss discipline. I see a lot of traders like to get into trade with no stop loss. See, why would you get into a trade not knowing where you're going to get out? That's dumb. That's not wise. That's a foolish decision you're going to make, and you're going to end up blowing your account. Remember to always use stop losses to define your risk before entering a trade. A stop loss is used to define your risk. You should never get into a position not knowing where you're getting out, whether it's take profit or stop loss. Without a stop loss, you expose yourself to unnecessary danger. There's so many times, listen, the market can move so fast, and a lot of us, you should go into the trade with stop loss already in position, because if not, if you just enter a trade randomly without putting the stop loss into position, listen, you can enter a trade and it can tank and you can be negative $1,000 and be sick to your stomach because you didn't have a stop loss. So understand that stop losses should be placed at logical levels below support or longs, right? Or you can put them at the next high or the next low, right? A place where not too high, not to give your trade room to move, but also don't put yourself in danger as well. Preserve capital in difficult conditions. Our goal is to preserve our capital in difficult positions. See, trading is going to give you some stress. It's going to give you some stress. It's going to have your emotions go up and down, and you have to learn how to preserve your capital at all points. In uncertain or highly volatile markets, focus on preserving your capital instead of chasing risky profits. See, during economic downturns, many traders reduce their exposure by holding cash or making fewer trades. See, there's times where we're not supposed to take trades at all because we're focused on, okay, let me preserve this capital. If you want to preserve your capital, you have to learn how to identify the condition that you are in and say, is today a trading day or is today a sitting on my hands type of day? Don't chase the risk all the time. Risk is cool sometimes, but don't chase it all the time, because when it doesn't go in your favor, you're going to be sick. Surviving to thrive. We need to adopt a long-term perspective. Your number one goal in trading is to stay in the game long enough to benefit from favorable conditions. Okay? Capital preservation ensures long-term success. See, this is why we should chase after just preserving our capital. Our goal is legacy. Our goal is long term. When you come into the trading game, you need to be thinking long term and not short term. If you think short term, then you're going to end up blowing your accounts faster than you can say go. Many professional traders survive through tough markets by taking small conservative positions and waiting for better opportunities. Some days the markets is going to look ugly. And if you still want to trade, you can trade all you want because it's your account. But put that risk size down. Don't always try to shoot for the stars. Don't always try to get the most money off a trade, man. Listen, What you're going to learn about trading is a win is a win. $50 win is good. $1,000 win is good. Depending on the account that you are on, it can actually benefit you in the long run. The next part of this mini course, trading psychology course, is process over outcome. Now, I want to stress the process. Okay. I want to stress the process. I've really learned to trust God within this process, and you need to learn it too. You need to learn it too. Focus on execution and not results. See, a winning trade can still be a bad trade if you didn't follow your plan. Process-oriented traders value execution over immediate results. See, the problem what I see with a lot of traders that ain't really profitable is they're always focused on the money. See, when you're focused on the money, you're going to make irrational decisions. This is why you're going to blow. This is why you're going to justify a dumb decision in the markets. There's traders that justify dumb trading decisions. They've built dumb habits that is only having them lose capital, and the proof is in the fruits of their labor. The fruits is what they're getting, the results that they're getting. Blown accounts. So if you are a trader that's trying to win, focus on execution. Am I executing my trading plan properly? Did I follow all my steps? What is my mindset when I came into the market? What does your process looks like? What does your process look like before you get into the market? That's what you need to understand. What does my process look like? Even if a trade hits your take profit, ask yourself, did I stick to my strategy? Did I stick to my plan? You should always be asking yourself if you stuck to your plan. The power of habit in trading. See, developing consistent, repeatable habits is crucial to long-term success. Learn to review your trades daily, follow your plan, and track your progress. See, this is the key. This is the key. Why do you think journaling is really emphasized in this industry? Learn how to journal. Learn how to track your process as a trader. Learn how to develop good habits and not bad habits. The reason why there's a lot of unprofitable traders today is because they adopted bad habits that has only led them to blowing accounts. If you don't want to blow your account, then stick to the process of building good habits. Set daily goals that focus on process, such as I will only trade setups that meet my criteria rather than the outcome. I will make $500 today. You see the difference between a habit-based or a process mentality and a outcome mentality. Process says I will trade setups that meet my criteria. Outcome says I will make $500 today. But that's not the case, because sometimes it does not present to you that opportunity at all. Emphasizing consistency over winning streaks. The goal is to build consistency. One great trade means little if followed by reckless ones. Focus on small wins, consistent wins, rather than hitting home runs. See, a trader who makes 1% per week consistently will outperform someone with wild swings in profit and losses. When you see your profit and loss chart, it should have a gradual incline. It should not be like this. That means you're making dumb decisions after your wins. If you're winning in the market, keep doing what's allowing you to win. Don't do things that's going to blow your account. Evaluating decision-making quality. After each trade, learn to review the quality of your decision-making. Were your entries and exits based on sound analysis? Did you manage risk well? You got to learn how to analyze your decision-making process, because at the end of the day, trading is you against you. It's you against the market. So over time, understand that quality decisions produce profitable results even if individual trades don't work out. So really learn how to make better decisions by journaling your process. You got to learn what's causing you to lose, because if you keep blowing prop firm accounts, if you keep blowing your own personal funded account, there's something inside of you that's causing you to lose that you're not looking in the mirror and taking accountability for. Accountability is crucial in the area of trading. If you're not ready to take accountability, you're not ready to trade. You're just going to keep blowing money. You're gambling at this point. So you got to change that up so you can get to the next level in your life. Improvement through journaling. Keeping a trading journal helps you reflect on the process. Write down why you took each trade, how you felt, and what you've learned. Are you journaling? Most traders is not even journaling. Most traders are at the point where they're not even doing what the successful traders said what makes them successful. After each week, review your journal, identify the areas for improvement in your decision-making process and your strategy, so you can see an incline in your account, so you can see an incline in you as a person. Trading will make you a better person. It will make you a better decision-making person. Understand your process. Continue to keep journaling so you can get better as a trader. The next section in this course that I want to focus on is emotional control. Too many of us are emotional when it comes to the markets. You make a dumb decision and you get emotional. You start punching your chair, pulling out your hair, doing things, crashing out. So learning how to control your emotions in the market is actually going to benefit you in the long run. One thing that I've learned is you need to expect losses. First and foremost, this is a game of winning and losing. So you need to detach from the results emotionally that you get in the markets, and that's from wins and that's from loses. Every trade has the potential to lose, so learning that we have to accept this as a reality before entering a trade helps us remove the emotional attachment that we have toward this trade. Why do you have emotional attachment towards the trade? Why do you have it? Because I want to make money, because I want to get out of poverty, because I want to get out of here, I want to have the cars, I want to have the girls, I want to have this. Bruh, you have this attachment to every single trade, and that's what's causing you to lose every single trade. Successful traders are those who can execute their strategies without being emotionally influenced by short-term outcomes. I don't care if this trade's gonna make me $1,000. I don't care if it's gonna make me 100. All I'm going to the charts for is for what? Did I follow my criteria? If I follow my criteria, executed it perfectly, and it went into my favor, that's a win. Following your criteria, your strategy, and your process is a win over you even making money. If you lost but followed your criteria, that's a win. I would rather lose, follow my criteria and my strategy, rather than win and my risk management goes out the window and everything inside my criteria goes out the window and I'm just trying to chase a trade. Not good. Recognize and manage fear and greed. See, fear can cause you to exit trades too early, while greed can cause you to overstay in profitable positions. Recognize these emotions to avoid irrational decisions. You have to learn how to read the market, because the market tells you when it's about to turn around. The market tells you when it's about to sink. The market tells you when it's about to accumulate. The market tells you when to get in and get out. So before each trade, ask yourself if you're feeling any fear or greed, adjust accordingly. If you feel fear that you're in profit 20, 30, 40 pips, bro, get out. You can catch 40, 20, 40 pips tomorrow again. You don't have to always shoot for the stars. Get your 1 to 2, get your 1 to 1, get your 1 to 3, and get out the markets. Trust me, I've lost a lot of money staying in the markets for too long, thinking it's going to continue to keep on pumping to my take profit. But the market is telling me that it wants to reverse. Learn how to manage your fear and your greed, man, so you can become a profitable trader. Avoid revenge trading. I can't stress this enough, man. Revenge trading, or the urge to recover losses quickly by taking impulsive trades, leads to further losses. Learn to step back when you're on a losing streak. When you're losing, you need to take a step back, analyze what's going on so you can become a better trader. After 2 consecutive losses, take a break and analyze what went wrong before trading again. Revenge trading is going to blow your account. When you revenge trade, you throw all your psychology, you throw all your criteria, your process out the window just so you can feel better and try to make your money back. Be careful when it comes to revenge trading. Developing patience through meditation. Now, one thing I want you guys to understand is the meditation is that sense of just being at peace in the moment, being present in the moment. My meditation is I meditate on the Word of God. I meditate on the Word of God and I allow God to truly, while I'm doing my breathing exercises, I allow God to truly take me through the process of being one with Him and being one with myself for the sake of me getting to the next level in my life. Practice being mindful, because if you can practice being mindful, it's going to help you when it comes to being patient and making less emotional decisions. Emotional control is crucial, and this can help reduce stress and prevent impulsive trades. Because I trust God in my process and I trust Him to keep me at peace, guess what? I make less impulsive trades. And you can too. Trust God in your process. Seek first the kingdom of God and His righteousness, and watch. It don't matter how many trades you lose. God is still in control. He's still in control. Get out of the driving seat. Let God be in the driving seat. You get in the passenger and you listen and obey. And watch your life take the turn that it's supposed to turn. Learn to take pauses after big wins and loses. Both wins and loses can cloud your judgment. After a big trade, take time to pause and recenter yourself before trading again. Many traders make their worst trades right after a big one or loss due to their emotional swings. Sometimes, man, I be hitting 700 gains, 7% gains on my account, and right after that, I used to have this habit of giving it all back. Giving it all back. Then getting it back. Then giving it all back again. So learn to take pauses. It's okay to take pauses. When you up, understand. You up. Take that as a blessing. You're up right now. What's the point of rushing into things that you don't need to rush into? Take it as a blessing, man. Having a longevity mindset. Let's talk about it. Trade for the long run and not for quick profits. See, building wealth through trading takes time. So what we have to do as traders is avoid the mindset and the trap of seeking instant gratification. This is not an instant gratification thing, and that's the problem with people. They don't listen. This ain't, hey, this process is a process. It's going to treat it. We have to treat it like a career. We got to treat it like a business. It's a marathon and not a sprint. Focus on your sustainable growth over months and years rather than how much you made in a day. See, the problem is we come to trading because we see everybody flipping this account, flipping this account, flipping this account. But what we have to learn is if you want to scale accounts, then you have to take wise choice. You have to make wise choices and you have to make wise trades. Simple as that. Trade for the long run and not for quick profits. Resilience in the face of drawdowns. Listen, you're gonna be in drawdown, but you gotta learn how to keep them pants up, man. Listen, you gotta learn how to truly say, you know what, I may be down 2-3% in my account right now, but I'm still good. I still got 5% left to risk. I'm good. I can bounce back, because if you lose 2% of the day, you can gain 5% of the day. You don't know what the market's going to give you the next day. So if you have the same, let's just say you lose one day and you go into tomorrow with the mindset of, I just lost yesterday. I can't believe I just lost yesterday. Let's get this back. No, that's a wrong mentality. You got to go back into it. You have to go into the market and say, okay, although I lost yesterday, today I'm going to make better decisions. Although I lost yesterday, today I'm going to follow my criteria and execute the way I know I can execute. Be confident in your strategy. Be confident in your plan. All traders is going to experience drawdowns or periods of losses. The key to manage them effectively, the key the key is to manage them effectively so you can recover and keep going. That's the goal. View drawdowns as a part of the journey. Listen, losses is part of the journey. Stay disciplined and reduce your lot size if needed. Losses is a part of the journey. Stay resilient. Don't give up even if you've blown account after account after account after account. Stay the course. Stay in the process. There's a reason why you came to trading. There's a reason why you saw opportunity in trading. Do not forget that reason. Every time you are in loss, you are in drawdown, don't forget the reason why you started trading to begin with. Do not forget. Avoid over trading. Remember that less is more. More trades do not equal more profit. Sometimes doing less results in more consistency. What we have to learn is stick to our trading plan that includes strict criteria for entering and exiting trades. Don't trade for the sake of trading. See, people speak for the sake of speaking, but don't trade for the sake of trading. Because if you're trading for the sake of trading, then guess what? You're going to lose a lot more money than win. Our goal is to preserve capital. Our goal is to preserve capital and reduce losses. That's the goal. Growth through continuous learning. One thing I learned as a trader is don't get complacent with the knowledge that you have. Always backtest your strategy. Always try to find new things that can actually improve your trading. Always learn from people who are better than you. A trader's journey never ends. The markets are always going to be evolving, and so should you as a trader in your knowledge and in your skills. So commit to reading one new trading book per quarter or attending educational webinars regularly. YouTube University, attending boot camps, reading books. All these things is going to help you as a trader. Remember, you are your greatest investment. If you stop investing into yourself, guess what? You're going to stop growing as a trader. Invest into yourself, invest into your mindset so you can see the results later on in your life. View losses as an opportunity for growth. Understand that your losses, you're going to lose you're going to lose, but you're going to lose in the markets. But what you have to understand is losses is not a loss if you're learning a lesson. Instead of feeling defeated by a loss, see them as valuable feedback of what you need to do to improve in your trading career. Every loss teaches you something about the markets and your own behavior. Remember that. You make decisions based upon how you feel. You make decisions based upon what you see in your behaviors, your habits, your attitude. So after a losing week, learn to review each trade and write down what you've learned to avoid repeating the same mistakes. The reason why a lot of people keep losing and are not profitable is because we repeat the same mistakes. Stop repeating those mistakes. Learn how to learn from your losses. Learn how to learn from your losses. And finally, the last part of this course here is discipline and patience. The importance of waiting for high quality setups is what I want you guys to understand. See, not every trade is going to be worth taking. So developing the discipline to act only when the market gives you a clear high probability opportunity is actually going to increase your portfolio in the long run. So remember, you can use a checklist to ensure each trade meets your criteria before entering the trade. What is your criteria? Stick to the criteria. Stick to your A plus, B plus setups and go from there. Because not every trade is going to be quality. You want to do the quality trades. You don't want to get manipulated out of your trades. And just take those setups that's going to serve you better in the long run. Stick to your strategy even in choppy markets, man. Choppy or uncertain markets can tempt traders to deviate from their strategy and try something different. I don't know what people be trying to do. But discipline means sticking to your plan no matter what. No matter whether it's bearish, bullish, consolidation, stick to your strategy. If the market doesn't meet your strategy criteria, don't trade at all. Adopt that mentality. Do you want to win or do you want to lose? Adopt the mentality to not trade at all if the market's not meeting your criteria. It's better to miss a trade than take a bad one. And that's how I look at it. Don't take a trade. Wait for the good one. Wait for the great one. Wait for the best one. Daily routine is important because a daily routine puts consistency in play. Develop a consistent daily routine that includes pre-market preparation. What are you doing to prepare for the markets? Are you doing it on the weekends? Are you doing it on Mondays? What are you doing? Trading hours. What hours are you trading? Don't be trying to trade every single day, because if you're trying to trade every single day, every hour, listen, it ain't gonna work like that, and you're gonna end up hurting yourself in the long run. Post-market reviews. Once the market is done doing what it's done doing in the day, analyze the market again. Listen, this is your business. This is your career. Fall in love with the process of what it takes to be a profitable trader, what it takes to be a winning trader, and this is the homework that you have to do. Traders with a solid routine are less likely to make impulsive decisions during trading hours. If you don't have a routine, then you're going to find yourself less profitable. If you have a routine, you're going to find yourself a little bit more profitable because you're making wiser and quality decisions. Small wins compound over time, family. Patience often leads to consistent small wins. Over time, these compound to create significant profits. Understand that patience is going to help you in the long run. Compound your small wins, and over time, they will turn into the biggest W you've ever had in your life. Focus on making small, consistent gains each week instead of chasing big wins every single day. You chase big wins, you're going to find yourself having what? Big losses. Small wins will equal eventually to what? Big wins. Trust the process. Give yourself some time, man. Delayed gratification in trading. Delayed gratification is a cornerstone of successful trading. Be willing to wait for the best opportunity and accept smaller, consistent gains. The ability to wait for the right setup separates successful traders from those who burn out chasing immediate profits. Listen, this is not a get rich quick scheme, family. This is not a get rich quick scheme. If you want to become a profitable trader and adopt a winning mentality, understand that you must delay your process. Be okay with delayed gratification, meaning you'll see the $1,000, $2,000, $3,000, $4,000, $5,000 days a year from now, 2 years from now. If you put in the work right now, invest into your mindset, invest into who you are, because it is you that goes into the market and makes decisions. So if you are not the best version of yourself when you go into the market, you can't expect to get the best out of the markets, because the markets will get the best of you. And sometimes the best of us is the worst of us. And if we are not investing into our mind, trading psychology, understanding why we do what we do in the markets, we're going to find ourselves losing more trades than not winning at all. So I hope this course truly broke down the mindset that you need to become a winning trader and profitable trader. If you can adopt these principles and this way of thinking when you approach the market, you will see true change in the trajectory of your portfolio and the trajectory of your trading career. Thank you guys for tuning in. I hope you guys found this valuable. Make sure you share this with a trader that you know is unprofitable and struggling with prop firms, struggling in their own personal journey. My name is Reef Trades, aka Kaika, and I'll see you guys in the next video. Peace.